They said it was impossible, merging the fast-paced, often misunderstood world of cryptocurrency with the ironclad machinery of traditional stock trading. Yet here we are, witnessing a bold leap that could redefine how we invest in publicly traded companies, starting with a name that practically resonates with Bitcoin devotees everywhere: MicroStrategy. Today, we unravel how Gemini's new tokenized stock trading initiative is shaking up the European Union, why it matters for anyone who cares about financial independence, and how, incredibly, this entire scheme runs on the Arbitrum network. Yes, you heard correctly. MicroStrategy, best known for massive Bitcoin holdings and headline-grabbing moves, can now be bought and sold in a tokenized format, courtesy of Gemini, inside the European Union. At first glance, this might seem like a typical piece of blockchain news. Another token, another platform, another attempt to make waves in the DeFi ocean. But believe me, this announcement is anything but typical. Today we will dig into the details of what tokenization actually means, how a regulated broker-dealer named Denari plays an essential role, and why the buzz around an Ethereum Layer 2 solution like Arbitrum is intensifying by the minute. You might be asking, so what exactly is happening here, and why should I care? The short answer: it is an unprecedented demonstration of how conventional equities, like shares in a global giant such as MicroStrategy, are bridging over into the realm of decentralized finance. No longer relegated to the exclusive domain of large brokerage houses or established stock exchanges, these assets can be accessed with a few clicks on a decentralized platform. This is the story of how investors in the European Union can now hold real-world equities in a purely digital form, benefiting from faster settlement times, transparent ownership, and possibly lower fees. And in this episode, we will explore how each piece of this puzzle, Gemini, MicroStrategy, Arbitrum, Denari, and the overarching regulations, works together to create a financial phenomenon that no one expected to see this soon. Let us start by laying out the key revelations we will cover in detail. First, we will unpack the groundbreaking significance of tokenized stocks, shedding light on why so many experts believe this might be the future of trading. Second, we will explore the partnership between Gemini and Denari, in which Denari's status as a regulated broker-dealer paves the way for a compliant approach. Third, we will delve into the special role played by Arbitrum, and an Ethereum Layer 2 project that might just have solved the speed and cost hurdles often plaguing decentralized transactions. Finally, we will examine the broader ramifications of a predicted $4 trillion of tokenized assets by the time we reach the year 2030. But let us not forget the deeper question: why MicroStrategy and why now? MicroStrategy has become a lightning rod in the market, largely due to its highly publicized foray into cryptocurrency. The company's vocal and consistent support for Bitcoin made the brand a prime candidate to lead this wave of tokenized equities. After all, if you are going to pioneer blockchain-based stock ownership in the European Union, you might as well start with a company that recognizes the power of decentralized assets. This selection is more than just symbolic. It underscores the synergy between a crypto-savvy enterprise and an exchange that has built its name on bridging old-school finance with cutting-edge blockchain technology. Before diving into the specifics of the Arbitrum network, let us understand the concept of tokenized stocks. In essence, tokenization is the process of representing a real-world asset, like a share of a publicly traded company, on a blockchain. Instead of a paper certificate or even an entry in a conventional brokerage account, ownership is recorded on a distributed ledger. Figures can be updated faster, and settlement can occur in near real time rather than requiring multiple days. Think about how revolutionary that is. You no longer wait for trades to clear or for funds to become available for reinvestment. Furthermore, you have the transparency and immutability of the blockchain, which can dramatically reduce the potential for fraud and errors. One of the most promising aspects is fractional ownership. In the future, you might not need to buy an entire share worth hundreds or thousands of dollars. Instead, you can purchase a portion of a share, a fraction truly custom to your budget. Now, consider the significance of tokenizing MicroStrategy stock in particular. MicroStrategy's close relationship with the crypto space means it has both fans and detractors across the board. Some hail it as a visionary, valiantly pushing the boundaries of corporate Bitcoin adoption. Others consider it a high-risk strategy, an all-in bet on a volatile asset class that could be detrimental in a sudden market downturn. Regardless of which viewpoint you hold, the public's fascination with MicroStrategy is undeniable, ensuring that any move to make its shares more accessible on a blockchain will be met with curiosity and excitement. And that brings us to Arbitrum, which is not exactly the usual suspect when we talk about tokenized offerings. Typically, if a project revolves around tokenization of real-world assets, you might assume it is done on the Ethereum mainnet. After all, Ethereum is the big powerhouse when it comes to smart contracts. But here is the problem. Ethereum mainnet is well known for its high transaction fees and slower transaction finality, especially during times of heavy network congestion. That is where Arbitrum steps in. By functioning as a Layer 2 scaling solution, it allows for more frequent, cheaper, and faster transactions, while still retaining the security of Ethereum's underlying architecture. Arbitrum's role in the Gemini initiative cannot be overstated. By issuing these tokenized MicroStrategy shares on Arbitrum, Gemini ensures a seamless trading experience, even when the Ethereum network is under strain. This means that for investors across the European Union, the barrier to entry is substantially lower. No more sky-high gas fees that wipe out the economic viability of small trades. Faster settlement times also mean a more responsive market, allowing retail investors to react quickly to financial news or company announcements. The mere fact that a major exchange like Gemini chose Arbitrum says volumes about how the Layer 2 ecosystem has grown to the point of being considered enterprise-ready. But none of this would matter without regulatory clarity, and that is where a company named Denari comes in. A regulated broker-dealer in the United States, Denari is the crucial link connecting the real-world asset, the MicroStrategy share, to its digital representation, the token. One of the most significant hurdles in launching tokenized securities is ensuring that the entire process is compliant with existing laws. You cannot just mint a token representing a share and call it a day. Regulators want to see that every share is legitimately accounted for, that ownership stakes are tracked accurately, and that consumer protections are in place. By working with Denari, Gemini is able to provide the kind of legitimacy that many other projects can only dream of, all while continuing to abide by the security-first model that has made Gemini a standout name in the crypto industry. Speaking of industries, it is critical to understand that tokenized stocks are not just a passing fad. If leading analysts and industry insiders are to be believed, tokenized assets, including real estate, commodities, bonds, and equities, could be worth as much as $4 trillion by the year 2030. You may wonder how that enormous figure can be justified, but consider this. By digitizing these traditionally siloed and paperwork-heavy assets, we could drive a wave of democratized ownership and unlock liquidity from corners of the market that were previously off-limits to the average investor. Tokenization might allow for faster cross-border transfers, 24/7 access, and a drastically lower cost of management. It is no wonder that both blockchain enthusiasts and institutional players are racing to figure out their strategy in this arena. Of course, Gemini is not the only exchange exploring tokenized stocks. You might have heard that Bybit, Kraken, and Coinbase have ventured into similar territory, each with its unique angle on how to bring equities onto the blockchain. The result is a microcosm of competition that benefits investors, lower fees, better user experiences, and more innovative solutions. The general consensus is that whichever exchange manages to blend robust regulatory compliance with a user-friendly interface and a wide offering of tokenized assets will hold the advantage in the race to capture this new market segment. But do not be fooled into thinking that it is all smooth sailing ahead. Regulatory frameworks can differ significantly from one region to another, and the European Union has its own set of rules and guidelines that might evolve as tokenization grows in prominence. The question now is whether the success of initiatives such as Gemini's tokenized MicroStrategy stock rollout will convince European regulators to embrace blockchain-based assets more wholeheartedly. A best-case scenario might be a set of updated regulations that encourage innovation by clarifying permissible activities, thus allowing even more public companies to follow MicroStrategy's path onto an Arbitrum-based marketplace. In contrast, a worst-case scenario could involve heightened scrutiny that drags out the approval process and stifles competition. If you are amazed by how swiftly tokenized equities are changing the finance game, take a moment to show your support with a like. It may seem small, but your simple acknowledgement helps this community grow and pushes these critical conversations to a wider audience. Let us talk about potential pain points for investors in traditional markets that tokenized stocks promise to solve. The first is accessibility. While many trading platforms have tried to open markets to the masses, plenty of friction remains, especially for international investors. High brokerage fees, currency conversion complications, and slow settlement times can deter smaller-scale individuals from market participation. By contrast, a tokenized stock offering allows you to trade equities at nearly any hour, from nearly any location, with near instantaneity. The second pain point is cost. Traditional finance processes are replete with fees, brokerage fees, custody fees, transaction fees, and a host of hidden costs that eat away at potential gains. Because tokenization leverages blockchain technology, the overhead is drastically reduced, creating incentives for more people to join the market. The third pain point is the challenge of verifying ownership, especially when trades move across borders. With a blockchain-based ledger, the provenance of each share or fraction of a share is crystal clear, mitigating disputes and enabling real-time audits. Combining these solutions, Gemini's approach hints at a future where the lines between crypto trading and traditional asset management blur into a single, seamless experience. Imagine a scenario where you hold not only Bitcoin and Ether, but also Apple, Tesla, and MicroStrategy, all inside the same decentralized platform. Now imagine that you can use those tokenized equities as collateral for a DeFi loan, or lend them out on a decentralized exchange for additional yield. These once futuristic concepts are inching closer to reality, and it is not surprising that mainstream investors and large institutions are paying closer attention. For Gemini, this strategic move is a natural extension of its broader vision. Founded on the premise of trust, security, and regulatory compliance, Gemini has long sought to legitimize the crypto world in the eyes of governments, institutions, and everyday investors. Adding tokenized equities is yet another step in erasing the artificial divide between what is crypto and what is traditional finance. In effect, Gemini is making a statement. The future of finance is unified and frictionless, and if you are not on board, you risk getting left behind. Now, let us address a core question that might be stirring in your mind. How does it feel to hold a piece of a conventional stock in your crypto wallet? Is it the same as owning the share through a typical brokerage platform? Make no mistake, holding a tokenized share confers real-world ownership of the underlying security, in this case, MicroStrategy. Gemini and Denari have set up a structure that ensures for every token issued, there is an equivalent share locked away, tracked, and accounted for. That means your digital token effectively represents actual ownership, not just an abstraction. The bonus is you gain the benefits of blockchain technology, such as instant settlement and global accessibility, without the headache of dealing with conventional silos. Of course, dividends, if any, and voting rights, if applicable, may come into play, so it is essential for potential investors to read the fine print on how those aspects are handled in a tokenized format. Yet the essential premise remains: you genuinely own the share, and your record of ownership sits neatly on Arbitrum's distributed ledger. As we begin to see how these changes ripple across markets, it is worth asking what might happen to financial advisors, hedge funds, and even entire stock exchanges. Will the New York Stock Exchange or the London Stock Exchange one day adopt their own blockchain-based solutions to keep pace? Will old guard financial advisors find they need to upskill in blockchain analytics, or risk becoming obsolete in the face of automated DeFi protocols that can rebalance portfolios on the fly? The questions are enormous, and the answers are unfolding in real time. Now, for everyone who wants to continue riding this wave of disruptive change in finance, do not forget to subscribe. By staying connected, you will never miss the next big update or the next in-depth analysis that could give you an edge in the rapidly evolving market. One intriguing element in all this is the perspective of compliance. Normally, talk of compliance can be a surefire way to reduce listenership, but fear not, there is drama behind those regulatory frameworks. When addressing finance, the scrutiny is intense and for good reason. Consumer protection, market integrity, and stability are at stake. In the case of Gemini's tokenized MicroStrategy shares, the existence of a regulated broker-dealer means that authorities can track how each share is handled, ensuring everything stays above board. This diligence can help quell concerns about money laundering, market manipulation, or unregistered securities, which have been significant stumbling blocks for many crypto-based endeavors. The more by-the-book everything is, the more likely it will gain traction with conservative investors and compliance-minded institutions, thus accelerating mainstream adoption. Next, let us reflect on the potential for cross-border synergy. One day, we might not even think about where a particular company is listed, because the tokenized version of its shares will be universally accessible. What if a French retiree wants to add MicroStrategy to a portfolio purely for its crypto exposure? No problem. What if a traveler from Spain wants to dabble in American equities while waiting for a flight? All from a smartphone? Absolutely. This is the promise of a more inclusive and frictionless global economy. Of course, time will tell how robustly governments embrace this borderless approach, or whether they might clamp down as they realize the implications for capital control and taxation. Yet the implications go even deeper than just frictionless investing. Consider the concept of decentralized ownership. It extends beyond finances to the realm of governance, corporate decision-making, and even how companies raise capital in the first place. If tokenized equity becomes widespread enough, we could witness a sea change in how shareholders interact with each other and the company, instead of stuffy annual general meetings with complicated proxy voting systems. Imagine a future where your votes and your opinions are recorded on the blockchain, instantaneously verifying your stake and giving you the chance to weigh in on important decisions without bureaucratic hurdles. It might sound futuristic, but it is the logical extension of what is happening now with Gemini's bold experiment in the European Union. Seen in a broader context, it is part of a pattern. Traditional banks are getting into stablecoins, major payment processors are offering crypto services, and even long-standing tech giants are exploring how to tokenize everything from supply chains to loyalty points. The lines once dividing finance and technology are disappearing, replaced by a rapidly evolving hybrid landscape in which data and value flow freely. The question becomes, how does the average person keep up? Many find themselves overwhelmed by the sheer volume of announcements, partnerships, and newly launched tokens. That is precisely why big stories like the Gemini MicroStrategy Arbitrum trifecta deserve careful attention. They represent not just a new product or service, but a broader shift toward democratizing finance. Regardless of whether you are a seasoned crypto investor, a skeptic who prefers more conventional assets, or even a newcomer trying to figure out the difference between a wallet and a traditional bank account, these developments may reshape your options and your sense of what is possible. But do not jump in blindly. While tokenized equities promise a wealth of opportunities, they also carry risks. What happens if you lose your private keys? How do you handle changes in corporate structure or potential delistings? Will there be times of heavy market volatility when a decentralized exchange cannot provide the liquidity you need to exit a position? These are valid concerns, and each one underscores the responsibility that accompanies any avenue of investment, innovative or traditional. However, these questions also present a chance for service providers and developers to create solutions that enhance security, clarity, and reliability. Any wave of innovation also tends to leave behind those reluctant to adapt. Traditional brokerages may find themselves under pressure to match the speed and reduced costs offered by blockchain platforms. Some institutions might fight back, lobbying regulators to erect barriers preventing full democratization, either out of fear of competition or a genuine concern over investor protection. In the middle of it all, individuals, everyday people, stand to gain or lose, depending on how quickly they adapt to the new paradigm. And there you have it. From a single announcement about tokenized MicroStrategy stocks on the Arbitrum network, we have uncovered a sprawling tapestry of possibilities, challenges, and potential transformations. Some experts believe we are on the cusp of a renaissance in finance, where the synergy of DeFi and traditional equities fosters an ecosystem that is more inclusive, transparent, and efficient than anything we have seen before. Others remain more cautious, pointing to inevitable regulatory hurdles, the complexities of large-scale adoption, and potential pitfalls of merging an exceptionally volatile asset class with mainstream investing. Yet one thing is clear: the partnership of Gemini, MicroStrategy, and Arbitrum is not a mere sideshow. It is a clarion call that a fundamental structural makeover in finance is already underway. The world of tomorrow could feature tokenized assets of every kind, from corporate stocks to real estate to fine art, each of them hyper-accessible, traceable on the blockchain, and integrated into an ecosystem of financial services that function seamlessly around the clock. That is why it is crucial to stay informed and remain future-ready. So, there we are, at the end of this deep dive into why Gemini's tokenized MicroStrategy shares matter not just for crypto enthusiasts, but for everyone curious about the evolving relationship between technology and finance. If you have found any of these points surprising or illuminating, consider sharing this story with friends who might still be skeptical or in the dark about tokenization. Together, we can spark a conversation that keeps the momentum going. The final takeaway: whether you are a diehard believer in blockchain's potential or a newcomer still on the fence, the time to watch these developments is right now. A massive window of opportunity is opening, and those who move quickly to understand and adapt could shape the next era of investing. This is not science fiction anymore. This is happening in real time, with real assets and real people ready to embrace a future unconstrained by traditional limitations. What happens next is up to all of us, as we collectively write the next chapter of financial history.